Good morning, students. In our chapter Reconstruction of Partnership, today we will be doing last sum, that is sum number 14, which is given on page number 142. This is the sum. Now, this sum is little bit different from the sums we did earlier. Here, they have given us, as usual, the old balance sheet. Dattu, Daya and Tarak are partners of a partnership firm, sharing profit and loss in the ratio of 4:3:2. Their firm's balance sheet as on 31/3/2017 is as under. This is the balance sheet. As on above balance sheet date, partner decided to change profit and loss sharing ratio to 1:1:1, that is equal, and the following revaluation account is prepared. See here, in this sum revaluation account is already given to us and old balance sheet is given. Let us see what we need to do. After revaluation account, they have mentioned here a claim of rupees 5,000 was against workers accident compensation fund. Okay, that is okay, we will do it. From the above information, write journal entries and prepare partners capital account and balance sheet after revaluation. So friends, what we need to do here, we need to write journal entries. What else? We need to prepare partners capital account and a balance sheet after revaluation with the help of revaluation account which is given to us, and one adjustment about claim for workers accident compensation rupees 5,000. Okay, so let us see one by one. We'll take items from revaluation account. Revaluation account credit side, if you will see, three items are given: land and building, creditors and income receivable. So this indicates that this is a profit. That means land and building, which is asset, its value is increased by 10,000. Creditors rupees 6,000, which is a liability. That means liability creditor is decreased by 6,000. And receivable income. So there is nothing like receivable income already in the balance sheet. This is about the unrecorded. Suppose there must be any income which is yet to be received and which is not in the books of account, which is not recorded in the books of account. So these three things, as they are credited to revaluation account, these three things are one kind of profit. Let us see one by one how to give the effect. Land and building, 10,000 will be added. Land and building is given 90,000 plus 10,000 will be added, so it will be 1 lakh in the new balance sheet after revaluation. So here it is, land and building 1 lakh, 90,000 plus 10,000. What we are making? We are making balance sheet, partners capital account and journal entries in the books of Dattu, Daya and Tarak. Okay, so first item was land and building. We have written in the new balance sheet after adding 10,000. Okay, regarding entry, we will be doing combined entry for all, so we will be seeing it later on. Second thing is creditor, 6,000 is decrease, right? So creditors are given how much? 50,000. Now 6,000 we have to reduce, so here it will be shown at the liability side like this: creditors 50,000 minus 6,000 not to be paid, outer column 44,000. Okay, let's come to the next thing. Income receivable 3,000. So there is no such income in old balance sheet. We will be writing this directly in new balance sheet. So in new balance sheet after revaluation, receivable income 3,000, last item you can see. Okay, let's come to the another. Then after there is partners capital account, that is loss on revaluation. Okay, we'll talk about this later on. First of all, we'll finish the remaining item of revaluation account. Now we can see machinery, furniture, investment, BDR, stock, outstanding expenses, bank overdraft interest. These many things are given at the debit side of revaluation account. All such things are one kind of loss to the firm, to the organization. Machinery 35,000, that is machinery's value is to be reduced by 35,000, furniture 5,000 is to be reduced, investment 3,000 is to be reduced, and BDR, which is a provision, 10,000. So BDR, which is a provision, it is to be increased by 10,000. Then stock is to be reduced by 3,000, and outstanding expense, this is again unrecorded, so will be separately shown in new balance sheet, and bank overdraft interest rupees 1,500 will be added to bank overdraft, which is a liability. Okay, let us do all one by one. First, machinery is given how much? 80,000, and 35,000 is the in revaluation account. That means we need to reduce it by 35,000. So 80,000 minus 35,000 will be shown in new balance sheet. Here it is. Machinery 80,000 minus 35,000, outer column 45,000. Asset side of revaluation account. Okay. Next is furniture. How much? 5,000. Furniture is given already 20,000. Right. Third item 20,000 furniture, and 5,000 we have to reduce. So 15,000 will be shown in new balance sheet. Here it is. 15,000. Furniture account debit minus decrease 5,000, outer column 15,000. Again asset side of balance sheet. Fourth thing was bad debts reserve. Bad debts reserve 10,000 we have to keep. Debtors, see whatever debtors are given in old balance sheet, consider debtors after deducting bad debts in old balance sheet. So here I can say that my debtors are 76,000. How much? 76,000. 80,000 minus bad debts. So bad debts I will remove because it is the bad debts which is old, which is already recorded in the books of account. So 76,000 is the amount of debtors, and BDR is 6,000. Okay. Now it is BDR at the debit of revaluation 10,000. That means BDR is to be increased by 10,000. So now BDR will be 16,000 instead of 6,000. It will be 16,000. So let us see how to record in balance sheet. Current asset debtors 76,000 minus 16,000 BDR, 60,000 will be in outer column. Okay. Next item. Next was stock rupees 3,000. Stock is given 15,000. 3,000 is the decrease. So 3,000 we will reduce and we will write at the asset side. So 15,000 minus 3,000. Here the stock is. Stock 15,000 minus 3,000, outer column 12,000. Okay. Next item. Next item says outstanding expense. So nothing such item is there in old balance sheet. That is what this is, outstanding expense which is also unrecorded. Okay, outstanding expense which is also unrecorded. So we have given effect in revaluation. It is already there in the sum, and the same will be written at the liability side of balance sheet. So here it is, outstanding expense rupees 2,000. Okay, right. Next, we can see all things are over. Now we will see the in revaluation account one thing is left, which is credit side rupees 40,500, and which is distributed between among three partners, Dattu, Daya and Tarak, rupees 18,000, 13,500 and 9,000 respectively. This is, my friends, loss on revaluation which is distributed among partners, which is supposed to be debited to partners capital account. So in partners capital account debit side we will be writing this to revaluation account, that is loss on revaluation 18,000, 13,500 and 9,000. Here it is, revaluation to revaluation account 18,000, 13,500 and 9,000, the second item. Okay, so we have finished with the revaluation account. Let us go through the entire old balance sheet and give the effect accordingly. One adjustment we have to keep in mind, a claim of rupees 5,000 was against workers accident compensation fund. Okay, let us go through the balance sheet. So balance sheet first item is land and building, and we have already written after changing it 10,000 we have increased, and we have written 1 lakh in the new balance sheet. Fund machinery 80,000, that is also we have written after changing its value. We have reduced 35,000 from it and 45,000 we have recorded in new balance sheet. Furniture also we have recorded at new value, which is 15,000, old value was 20,000, 5,000 is reduced. Investment also we have recorded 12,000 and it is given 15,000, so 3,000 was the reduction in the value of investment. Then is what data, so data we have just written, it is now 60,000, 76,000 minus 16,000 BDR, so 60,000 is the new amount of. Next item is bills receivable. So bills receivable is not shown anywhere, means we have not written yet in new balance sheet, and there is no change in bills receivable, so it will be carry forward same as it is 5,000. So in new balance sheet, bills receivable 5,000. This is bills receivable 5,000. Next item is stock. Stock is 15,000. We have written the value of stock after changing it. There was a reduction of 3,000 in the value of stock. We have reduced and 12,000 we have written. Next is cash balance 55,000. So cash balance 55,000 will be written at the asset side as it is, because there is no change in the cash balance. So 55,000 will be written here. See this cash balance rupees 55,000, second last item, asset side of balance sheet. Okay, next. So next is profit and loss account. Now this is profit and loss account given at the asset side. This is what debit balance of profit and loss account, which is also known as accumulated loss. It should be debited to all partners capital account in their old profit and loss sharing ratio. This is distributed among partners and this is debited to partners capital account. So in partners capital account, 27,000 will be distributed among the partners in their old ratio, which is 4:3:2. Okay, so here the calculation is 27,000 is the total amount, 4/9, 3/9 and 2/9, 4:3:2. So 12,000, 9,000 and 6,000. This will be written here. Debit side of revaluation account. So debit side of partners capital account. See, to profit and loss account 12,000, 9,000 and 6,000. The first item. Okay. Second item 18,000, 13,500, 9,000 we have already written from the revaluation account, which is a loss on revaluation. Okay. Now this will be journal entry for profit and loss account. Dattu's capital account debit, Daya's capital account debit, Tarak's capital account debit to profit and loss account. 12,000, 9,000, 6,000, 27,000. Narration you want to write, being profit and loss account debit balance is distributed among partners due to revaluation. So this is, we have finished with the asset side. Now take liability side. Liability side, first item is capital. This is the opening balance of capital and we are making capital account. So this will be written at opening balance of capital, that is balance brought down in capital account of partners capital. Right. So here by balance brought down 1,50,000, 50,000, first item at the credit side of partners capital account. Next item is reserve, general reserve 36,000. Now general reserve is a reserve which is to be distributed among the partners. 36,000 is the amount and old ratio in which it is to be distributed is 4:3:2. So here the calculation is general reserve 36,000 and 4/9, 3/9, 2/9 comes to 16,000, 12,000 and 8,000 respectively. Now this should be credited to partners capital account, as we very well know this. So partners capital account credit side by general reserve 16,000, 12,000 and 8,000. Second item you can see. Okay. Entry for the same, general reserve account debit to Dattu's capital account, to Daya's capital account, to Tarak's capital account, being general reserve distributed among partners in old ratio 36,000, 16,000, 12,000 and 8,000. Next, workers accident compensation fund 23,000. Now friends, 23,000 is the compensation fund amount and there was an adjustment, a claim of rupees 5,000 against workers accident compensation fund. Earlier also we have done this kind of adjustment. Here what we need to do, out of 23,000, 5,000 we will be converting in the claim. that will be a liability, and remaining 18,000, 23,000 minus 5,000, 18,000 will be distributed among the partners in their old ratio. So here is the calculation. Total workers accident compensation fund 23,000, out of that 5,000 will be claim amount and 18,000 will be distributed among old partners in their proportion, in their old ratio, that is 4:3:2, 4/9, 3/9, 2/9 comes to 8,000, 6,000, 4,000 respectively. So workman accident compensation fund 5,000 will be written at the liability side as claim. Workman accident compensation claim rupees 5,000, last item of balance sheet, liability side. Okay, and this 18,000 which is distributed will be at the credit side of partners capital account. So credit side of partners capital account by workman accident compensation fund 8,000, 6,000 and 4,000. Now my friends, the journal entry for the same will be workman accident compensation fund account debit 23,000 to workman accident compensation claim. Fund to claim, workman accident compensation fund account debit to workman accident compensation claim account 5,000, to Dattu's capital account 8,000, to Daya's capital account 6,000, to Tarak's capital account 4,000. So this 23,000 amount is distributed like this: 8 to Dattu, 6 to Daya and 4 to Tarak, and 5,000 is converted in the claim. Okay, if you don't want to write this entry, that will also be enough. If you write workman accident compensation fund account debit 18,000 to Dattu, to Daya, to Tarak 8,000, 6,000 and 4,000 means their capital account. Okay, means if 5,000 you don't want to show in journal entry, it is okay, but it's advisable because in next chapter it will be compulsory to write like this. So it's better to write from now. Okay. Next item is bank loan 9%. 9% bank loan, that is non-current liability. So we have to write this because we have not written it. In new balance sheet we will write non-current liability 9% bank loan 40,000. Okay. Then is creditors 50,000. We have already written creditors at the liability side after deducting the means that amount which is not to be paid 6,000. So 44,000 we have already written. Bills payable 20,000. So it is not written yet. So bills payable will be writing here. Bills payable. It is 20,000. Bills payable rupees 20,000. Liability side of balance sheet. Okay. Bank overdraft. So I think I don't know whether we have considered bank overdraft or we forgot to write it. Bank overdraft interest was 1,500. It is 8,000 in the old balance sheet. So now it will be 9,500. Okay. So 9,500 will be the bank overdraft interest amount in new balance sheet. Here it is, bank overdraft 8,000 plus interest 1,500. So here we have finished with all adjustment, everything. Now what we will have to do, we have to find difference of capital account, which will be a closing balance of capital. If we will go through our capital account, we will see the Dattu's column, the credit total is 1,24,000 and debit total is 30,000. So 94,000 will be the balance of the Dattu's column. The same way Daya's column, credit total is 68,000, debit is 22,500, so difference will be 45,500. and in Tarak's capital 62,000 is the total of credit side and 15,000 is the total of debit side, so 47,000 will be the difference, right? So my friends, the closing balance of capital of all three partners will be 94,000, 45,500 and 47,000 respectively. Okay, this closing balance will be written in new balance sheet as a balance of capital of the partners. So let us see 94,000, 4,500 and 47,000. 94,000, 4,500 and 47,000 capital accounts. Total outer column 1,86,500. So here we have finished with everything in balance sheet. We will make total of balance sheet. Total of balance sheet comes to 3,07,000 both the sides. Okay, and maximum entry we have run entry for general reserve, we have done for profit and loss account, we have done for workman accident compensation fund, and we have to pass entries for the items of revaluation account. Let us see once again. Revaluation account, 3 items: land and building, creditors, and income receivable at the credit side. So one entry we will write for this: land and building account debit, creditors account debit, income receivable account debit to revaluation account. Here it is. First entry in my format: land and building account debit, creditors account debit, income receivable account debit to revaluation account, being changes in the value of assets and liability due to revaluation. Here the order of entry is not important, you just need to write all entries. Which entry you write first, it's not a matter. Second thing, if you want to write 3 different entry for this one, then also it is allowed. If you write land and building account debit to revaluation account 10,000, then second entry creditors account debit to revaluation account 6,000, third entry income receivable account debit 3,000 to revaluation account, that is also fine. That is accurate actually, that is more acceptable. Okay, but this is also enough in this particular sum: land and building account debit, creditors account debit, income receivable account debit to revaluation account. Friends, debit side: machinery, furniture, investment, BDS, stock, outstanding expense, and bank overdraft interest. These many items are there. We will pass one entry for that: revaluation account debit to machinery, to furniture, to investment, to bad debt reserve, to stock, to outstanding expense, to bank overdraft interest. So here the entry is revaluation account debit. Second entry in my format: revaluation account debit 59,500, to machinery account 35,000, to furniture account 5,000, to investment account 3,000, to bad debt reserve 10,000, to stock 3,000, to outstanding expense 2,000, to bank overdraft interest 1,500, being changes in the value of asset, liabilities, and provisions due to revaluation. Okay, now the last entry is required for the loss on revaluation, which is 40,500 and which is distributed among partners as 18,000, 13,500 and 9,000. So the entry for the same will be: Dattu's capital account debit 18,000, Daya's capital account debit 13,500, Tarak's capital account debit 9,000, to revaluation account 40,500, being loss on revaluation distributed among partners in their old profit and loss sharing ratio. So this was all about sum number 14, and here we have also finished with the chapter 4. In next videos we will start new chapter number 15. Okay, thank you.